around, stocks turn around. It's an uncanny sort of a fixation at the hip here. Todd Horwitz, Average Joe Options. Why is that? And it still continues. Why is that? Will we ever be able to break it? What do you think?
Hi, Neil. First of all, I don't agree with that theory. I believe that oil and the markets are not connected. I think that they're totally different. In fact, I would be a buyer of oil here and still a seller of the markets. The whole problem comes back down to the financial engineering that has been done by a Fed that has no common sense and is fairly incompetent at the job that they're doing, not putting the money in correctly. The cheap gas that we thought everyone was going to save and spend, well, unfortunately, they're not making enough money to pay their bills, so the money they're saving on gas, all they're doing is paying their regular everyday bills and learning how to eat. The middle class is still in a recession from 2008 because this is the same credit bubble that we've never come out of. No matter what they want to say, no matter what reports we hear, we aren't making enough money. We have no real growth, so we're not producing jobs. Look at commodities; they're down at 18-year lows in the general spec. So that's
what worries me, because I say when they drop to the degree they have, and I love low gas prices, low interest rates as much as anyone. But I'm wondering if it's a deflationary environment. I wonder if it's a sign of what's going on in Europe and their banks, and they're just bleeding cash. Whether there is something bigger going on here of global deflation, whatever you want to say. What is it?
There is something much bigger, and that has to do, when you try to manipulate and you try to engineer a market to do what you want it to do, and you try to kick the can down the road trying to solve a problem later, those problems eventually come to roost. And here's what we have now. We allowed all the banks and the companies to buy back all their stock at cheap money. We allowed everybody to fluctuate out. We allowed the banks to get all their money back from the bad lending decisions they made. Then we poured on regulations on top of these banks to stop them from lending. So now you've got banks that are in trouble because interest rates aren't high enough, because they can't lend, because they can't get enough return. So they're going to take the money and give it back to the full faith and credit of the United States government. So the whole problem has been built by the engineering job that the central banks around the world have done, including Japan, including Mario Draghi, including Janet Yellen, Ben Bernanke before him, and even Greenspan was the start of all this. And that's where these problems come in. You cannot push problems away. You need to address them. And until you admit you have a problem and address it, you're going to continue to have those problems, and they're going to get a lot worse as we go forward.
Real quickly, Todd, I did want to get your thought on this notion that we overdo it on the sell side, or that, especially when it came to banks. I was noticing overnight with what was going on with Asian banks and European banks, and that, to me, I don't want to tie the two together, because it's very different times with the meltdown where they sold first, really examined the fundamentals later. And that is, this sell-off in financial shares seems very disproportionate to what's actually going on with the banks they represent.
I would agree with that. I think that we tend to overdo it. I think you have a tendency to have people panic and they run for where they can go first and they start dumping whatever they can. I think that they have been overdone, but they do have some serious issues here and they need to be solved. And the only way to really solve them is to meet the problem head on, start raising rates, and let the economy do what it does. But we need free markets and price discovery. Let the markets price themselves and not have the Fed worry about pricing the markets.
Todd Horwitz, thank you very much, my friend. Good having you.
Thank you. Thank you.
All right. We've met